All right, traders, let's jump into our recap for August 18th, Friday, in the markets. Saw the markets with a nice comeback bounce. Today, let's jump in and take a look quickly at the markets. And here's the intraday on the SPX. Gap down at the open here and just a slow move back higher. We moved initially in the first 2 hours to fill the gap, traded sideways to down for a bit, and then ended the day on a decent note here. Now, was it super easy? Not particularly difficult, I don't think, on the day. It looked like the bulls were ready to put up a fight from almost the open on the day, and bears were just a little tired from kicking butt all week, apparently. But if we look at the 3-minute here, we gapped down. And what was really unique about yesterday was it was a great day for zero DTE trades. And we're going to share that. We had a bunch of winners on zero DTE as well, which is not a main strategy of mine. It's a spec trading strategy. However, everything else working in the account and nothing to put on, might as well do a little zero DTE when the market conditions make sense. And I think they made pretty good sense yesterday. So when we gapped down at the open here, if we look at the first 15 minutes, we gapped down, we moved back up right to about that 43.50 mark. And if you really look at the 15-minute here, we stayed in that range for a good hour and a half or so, right at that mark, and then we're only a few points off of that within the first hour and a half or so. So it was a good day to put on an iron butterfly. It was a good day to do some other trades. I'll talk about the zero DTE that we did do and some of the other trades that we closed. But you opened down, we rallied back up, gave some back. We just stayed right in that 14.50 range, give or take 5 points on either side. We were in that until 11 o'clock. So putting on an iron fly right at the first 15-minute open, at the end of that at 9:45, we were right at 43.52. So it was a perfect day for the zero DTE iron fly, which not every day is. You're waiting for VIX to pop up a bit, which it never does, but you need a little bit of volatility to really get the trade working a little bit better. We're a lot more directional on our zero DTE stuff, but you just stayed in that range all the way here till about 11 o'clock. Then we started to make our moves higher. And if we watch a little bit of what we're tracking here, so when I'm looking for an intraday swing, there's a couple different zero DTE trades that we will do. Number one is that iron fly at the open, and I'm typically going about 60 wide on my wings or so, which gives us a pretty good tent, and we're just trying to take a couple points out of that 10% or so. And then another way I like to trade zero DTE is I look at the opening trend, what's happening here. And if you really look back at the SPX here, and I'm going back all the way to yesterday, so if we are to Thursday, it's a pretty good downtrend line, right? So the 50, 200's moving down, the 50's moving down, and the 21's moving down, and they're all stacked lower. I'm not sure that trading anything to the upside would be a fantastic idea. So at the open, we wait usually about an hour or so, see where things go. And it was nice to see that the market moved up, gave us a chance to put in a zero DTE call credit spread, which we did up around the 4,400 mark. So this gave us a good opportunity. So that 4,400 was right about where that 50 EMA had started. That's not why we picked that, but it gives us a pretty good level here as well. And then we were also able to trade when the markets had moved down, we were able to also put on a butterfly trade as well. So we actually went long with a call butterfly. So we had a bunch of different trades yesterday. So you had a zero DTE iron fly, you had a call credit spread, 0 DTE. We also had a call butterfly, because once the markets had gapped down and it looked here, you could see the squeeze tipping over right around here or right around 1030. You could see RSI oversold and starting to come back up. You could see MACD momentum starting to change. So it looked like on the 15-minute, the trend was going to be up for the day. Now, the initial downtrend here, we're okay putting on that call spread, but I also wanted to play the potential for this reversal after that opening, and looking at a call butterfly that we put on that was slightly out of the money, and we'll talk about that particular trade. I think we could have managed it better. We still had a nice 68% winner on that. We ended the call spread with a 75% winner, and the 0 DTE Iron Fly was a nice winner as well. Almost 6% return on the margin. So all of those worked out. We also had a 1 DTE put butterfly that we were able to take off as that market moved down to that 43.50 mark. And we actually ended the day 43.70 and higher, but we took that one off for a 122% winner there as well. So that was a 1 DTE. So between the 0 and the 1s, they worked out pretty well for us on the day. Something to keep us busy while the rest of our trades just made money on the day. So let's take a look at the markets themselves. We'll jump into SPY here. If the week ended itself, obviously pretty much lower. We did come off of those lows, but that didn't happen until Friday. But we did still come down and almost really tap this previous resistance level, which has now become a potential support level. So you get this SR flip from resistance to support, and we banged right on that on the weekly and finished higher. Now, MACD still weak, RSI still heading down. I don't think this market is anywhere out of the woods at this point in time. We switch over here to the daily. This trend channel that we had was broken on Thursday. We did bounce yesterday. Again, very close to this support resistance line that flipped for us. Let's see if we get any. I'm going to take some of these off. We'll see if we get any bit of resistance up here if the market tries to move higher, but really you've got no shortage of things that are resistance, including the 21 EMA and the 50. MACD still heading lower. RSI is oversold. I would not be surprised if we see a bit of a bounce here in the S&Ps, and then we tail back down lower. But if you look at the context of the weekly, you've got higher high, higher low, higher high, higher low, higher highs, higher low. Okay, so there's nothing right now that indicates we have broken this uptrend. Yes, a 5% pullback, totally fine. I mean, I don't know who doesn't like a nice pullback if you're wanting the stocks to move higher. I put the fibs on here too. So we're looking at the 38.2, which is not my favorite fib, around 430 on SPY. We'll see if that's an area that we can get into. But yeah, still bullish over on the weekly. Even though you got some internals weak, it's totally fine right in here. This uptrend channel is still intact. And if we take a look at the October lows, and we draw that line up higher, until this line breaks, we are still in a bullish trend. And nothing that's happened this week has changed my mind on that. That's now going to be around that 413, 415 mark, which is where the 200 is. So we got to get down to about that in order to change my mind. I still have not seen any kind of a lower high, lower low scenario yet. Maybe a little bit in here, but nothing on SPY that would make me change my opinion that we're still in a bullish trend until we see otherwise. Nothing more right now than a pretty good pullback and a way to get back into potentially some trades. I'm not going to get long on anything in this point, but it's perfect for the style of trading that we do and great for premium selling as a whole. On the Qs, pretty much the exact same thing. We are still in this nice uptrend, which is a much steeper uptrend, so a lot easier to break when it comes to that. However, it did break some key support levels in here and then bounced back above them. I'm still not sure where we're going, and I'm not going to predict that we go any lower, and I'm not going to predict that we resume the bull march higher. I think right now you've got to consolidate in here and give the market some time to establish some new levels and figure out which direction it's going. I think right now you just continue to sell premium, let theta work for you, and place the trades that make the most sense. And I'm not really picking a direction. I'm not going to, obviously as a premium seller, we don't typically pick a lot of directions. We're okay up, we're okay down, we're okay sideways. It doesn't really matter to us as long as we stick to a plan. But if I'm going to, look to pick a direction, I need some more information from these charts, and I'm not really seeing it right now. IWM was the worst looking of the bunch. Had a pretty hefty down week. It did finish off of its lows, but it tried to hit new lows. It tried to break the 200 moving average on Friday. Did not do that. It held, moved back up. A little bit of a MACD reversal bar. RSI oversold and moving forward. So it's perfectly in the middle of this channel. It's a really nice opportunity potentially to strangle or something else in here if we get any kind of a bounce. But again, we can move up and then keep selling off. We are below the major moving averages, so we'll keep an eye on that. VIX did try to rise on Friday and then couldn't, finish just off of its lows on the day, potentially getting a little bit overdone on the VIX. Doesn't mean it can't go higher. If you look at the weekly chart, volatility is on the move and moving higher, which is great for most of the trading that we do. And then if we look at the dollar as well from yesterday, just looking at the daily here, it's just fighting with this previous resistance level. We've banged down it 2 sessions in a row, almost 3 as well. That's exactly where this downtrend line is. It's also where this 200 moving average is. So you got a lot of junk right here above on the dollar. Now you did get to 21 breaking above the 50. It's a pretty bullish looking short term, but you're still below the 200. So until we can get above that and get things stacked, we're not in a definitively bullish move. And if you look at the weekly chart, this is still down, lower, lower high, and now it's another lower high. So we've not really established anything except the fact that we remain in this channel over here. So we remain in this channel between here and here, and this is nothing more than just bopping to the top of this channel at this point. However, the dollar has a tendency to make things a little more difficult on most of the indexes. TLT, every time somebody sees a green bar, they get excited and get on YouTube and start talking about, you got to go all in, massive opportunity, huge opportunities. You got to go long TLT. Well, people have been saying that now for 3 weeks, and they've watched it drop from 100 down to 93. So if you've been getting long and long and long, you're down a good 7-8%, while the market's down only 5 or 4%. So you've been a little early on your move. I said we weren't going to move until we really got close to this previous low and really put in a double bottom. We might be there. RSI is low. It's oversold. It's starting to curl up, but we saw that happen here. And then what happened? It tailed off and dropped another 4 points or so from that level. MACD, not really definitive. It is starting to try to improve. It is very overdone on the actual MACD lines. You are at the 3 ATR. I mean, it is absolutely oversold. The problem is it can stay that way for quite a bit, and we've been oversold to 3 ATR now for over a week on this. So keeping an eye on it. It might be time to jump into TLT, TMF. I'm not saying that it was a bad move to try to get in here, but I think you were just premature on it. Why don't you just wait until you get a definitive sign? And there's no definitive sign that the bottom has been reached on TLT. Is it this Friday candle? Is that the big candle? Is that the excitement? Or is this Thursday hammer here? Was that the reversal where the bears couldn't push it down anymore? Maybe. Okay. But we've seen this before with these candles, and we've also seen continued sell-off. So we'll be watching the dollar. We'll be watching TLT. Aussie dollar had a nice, calming day, kind of finished unchanged on the day, slightly up. British pound, I've been banging the table on this. I think this is bullish looking. It's really fighting to hang on here. MACD's been trying to reverse higher. Even though the weekly is a bit weak, we've been holding this uptrend. We've been following right along it. If we don't give up this ghost here at 127, at $1.27, then I think British pound is good looking. But it's the best of the Forex pieces. 6E here on the Euro futures, also weak, just like 6A. Oil on the day had a nice up day. It's back above the 21. So all the thoughts of the end of oil still might be a bit premature. I don't see it personally. I think a pullback was due. I mean, when you look at this, straight up, pullback, straight up, pullback, straight up. Okay, you really had very little bits of pullbacks on this pretty hefty move from 68 all the way up to 85 or so. There's been a couple breaks. It's all good. So I think you need to pull back. And if you look at the weekly here, you've got some resistance levels here. In fact, this is a pretty hefty resistance area. Look how many weeks we have hit this particular line as we draw this across. So, you banged it once, then twice, then almost 3, 4, 5, 6, 7, close right on at 8, 9. So 9 times we've been back to this same spot on oil. And we've had a tough time really getting through this level at 83. So a pullback, totally fine. I think it needs to regain a little Momo so that it can move higher. So I'm all good with this pullback here. Playing strangles on this has been fantastic, and 112 trades on oil. One of the most consistent trades that we've had. And if you go back all the way to December, actually, we can even go back to almost November of 2022, and we are at the exact same point that we were November of 2022. So almost almost a year ago. We haven't really moved on oil, and we've been in this pretty much of a range from about 68, 60, 70 up to about 80 something. So this 10-point range in oil, sideways moves, building a really good base on oil here, I think, for a potential move higher. Gold, on the other hand, looks terrible and continues to sell off. Had a pretty horrible 3 weeks in a row, finishing almost at the low of the weeks. The MACD, RSI just heading lower on the weekly. If we look at the daily, are we starting to find a little bit of a bottom here around this previous support? So this is where we bounced previously. It's also where the 200 MA is. That may provide us some relief. MACD starting to turn up. RSI is oversold. So I think you're looking at some pretty good opportunities in gold. So that being said, there's gold, and then nat gas sold off again on the day. So this big rally that everybody was fearing here just kind of petered out and back down to here, which is perfect because we are now in the trap on some 112s on nat gas, which is a pretty hefty multiplier. It's a pretty good opportunity trade. We're right in the middle where our strangles are on nat gas. So looking great on that. If we take a look at the sectors and where we are, sectors, XLK, just like the markets, finished up a bit. We can extend this line over here again, this particular resistance in here. And then again, this is where we keep finding some potential support back in here, get some consolidation for a move higher. We'll see if it holds again, but pretty good underlying moves in MACD and oversold RSI for at least a bounce in tech. We'll see if it turns into anything more than that. XLY giving up a bit this week. XLC giving up a bit this week. XLE had a nice little pullback for a couple days and then a really strong day yesterday on XLE. Continues to be probably my favorite sector right now to want to be in. So I love oil, as you know, loving energy. I think this is a great trade to make. I think we can move higher from here. You've got the 50 about to cross the 200. We bounced nicely once, twice, almost 3 times off of this 21 EMA, which is stacked above the 50. Got MACD starting to reverse higher. RSI making a little U-turn back up here. The weekly looks super nice on the MACD. Moving higher, RSI moving higher. So I think you've got really good looking stuff here. And your 21 getting further from the 50. So it shows that the momentum is definitely picking up on energy. So I love energy in here. Financials, not so much. They've been selling off. The weekly not looking so great. Starting to get into this descending triangle. MACD, RSI, the airs coming out of the finance balloon had a terrible week this week. If we look in here, we had a pretty good gap down on the 15th. And then just day after day, we just sold lower, tried to put in a little bit of a bounce yesterday. Not a whole lot of anything on XLF. Again, I'm watching this descending triangle here. I think if we break below here, we have a pretty good opportunity to sail lower. But we'll see if we get any bounce and we can break above this this downtrend line. We'll see what happens on financials. And then taking a look at some individual stocks. Amazon, tough 2 weeks on Amazon. MACD has just been coming, the air has been coming out of it for weeks on end. RSI finally dipping lower. It's finally weakened here on the daily as we really had a pretty tough week this week in Amazon, dropping from about 140 down to 130 and bouncing and ending up about 133. So Amazon not looking too good. There's nothing positive on the MACD or the RSI. And the only thing here is the 50 MA next at 130. If we take a look at Apple, a really tough 3 weeks for it. The first 3 weeks ago was a really bad one. Pretty not too good last week. Now this week we did sell off, had a little bit of a bounce today, but we have, you've got the 21 breaking below the 50. That's not a good sign. Apple needs this pullback. It needs to get down a little bit further. I think, if 20% off of about 200 be 160, I think this 160 level, which is right where the 200 MA is, which is a 20% pullback, I think that's a great spot. I think I would be pretty comfortable at this point putting some puts on right around this 160 level below the 200. You got MACD trying to reverse itself higher. You've got RSI just oversold. So this is why, again, RSI, just once it gets oversold, doesn't mean it's coming out of that. And we've been in it now for over a week and a half now. We've been oversold on RSI, not coming to life. Now, you've got new lower lows and not necessarily a lower low here yesterday, but you did have the lower low the previous day. So RSI is pretty much tracking along with what's going on, but on the weekly doesn't look positive there either. The weekly on Microsoft doesn't look positive. Daily getting a bit overdone, could get a little bit of a bounce, but I don't think any bounce I would be getting long on any of these. The weekly is bad on Amazon. The weekly is bad on Apple. The weekly is bad on Microsoft. The weekly is bad here on Meta. The weekly is bad on Google as well, even though it's the best of the bunch. And you would have thought the way Google hung in there like a champ all week long on the week. While everything else was sailing down, Google was just moving a little bit higher even the last couple of days until Friday. So when the market bounced a bit Friday and came off of its lows, Google actually sold off, which is the most unusual thing. But if you looked at the MACD and the RSI, it's been telling you that the air has been coming out of that move. So I still like it here. I think it's held up the best of all of the stocks. But when you look at the weekly here, the air is just coming out of this thing, and you got to be careful. NVIDIA, same type of thing. I expected us to come down and fill this gap at some point. I had a trade on for that. This big giant green candle back in here on the 14th totally nixed that trade. I'm still going to probably come back in at this trade. I don't care what the earnings are. I still think this thing is overvalued, and I buy a boatload. And it's hard to fight the tape, so really not interested in doing that. But I think at some point you got to at least fill this gap down to 316 at some point on this trade. Now, is that going to be today, tomorrow? You got earnings coming out on the 23rd. So we're going to find out what's going on with earnings this coming week. And maybe they get a kickoff of earnings like they did last time, but they can't use the words AI here because they've already gotten the big bump off of AI. Now, after that bump, though, and that's where we made that gap up on those earnings, okay, the low there was 368, and now we're sitting, up here about 429. It's a decent, it's a move up, but it's really been in this kind of a sideways up and down move since those earnings. So we'll see what earnings do here. The weeklies just don't look great. I think I don't really want to get in front of a train like NVIDIA, but I think you could sell some credit spreads on this thing, especially after earnings potentially. Taking a look at Tesla. Tesla has been getting just the living daylights kicked out of it. It looks terrible as well. The weekly, at MACD is about to cross negative on the histogram. So you're getting a crossover on the MACD lines. RSI is heading lower. It's broken the weekly 21 and 50. It's broken this previous support or resistance line. Has flipped to support. It broke through that. There's not a lot of good looking things here on Tesla. Netflix, not a lot of good looking stuff here. It hasn't broken the 21 on the weekly. And if we looked at Microsoft, it tried to break it, finished at it. If we look at Meta, it's not there yet. Google, not there yet. Amazon, not there yet. So these stocks have a little ways to go just to get to the 21, with the exception of Netflix and Tesla. But they're all sitting right above the 21 on the weekly. So we'll see what happens. But right now, again, I don't like the looks of the weekly charts. Daily might be getting a bit oversold, which means a little bounce could be happening. And then I think you've got to sell off more. Potentially nothing, set in stone. We could reverse. There's lots of opportunities to bounce off of the 50 EMA on the weekly, potentially the 21 EMA on many of these stocks. We'll see what happens. All right. So that's a lot of time spent talking about the market. Let's take a quick look at the count for Friday and see what we did and see where we finished up. All right. So on the 18th here, we ended up with 759 on our delta, a little high still, a little higher delta than we would like, but on these sell-offs, that's what you get. So I'm okay with that a little bit. I would like to get it down a little more. Theta 757.27, right in our wheelhouse. I would like more than 0.3, but at least 0.3 is what I'm shooting for lately in this low vol era that we're in. So we're not bad. We're still cranking out $757 worth of theta here on a daily basis. Netlick jumped up 278, 848. Pretty much puts us back to where we were or so about a week ago on this. And then BP usage, 160, stayed pretty much the same. Dropped a bit to 57%. We did pick up another $253 on this particular account, giving us $1,621 for the week, which gives us $5,327 in realized gains, again, on a $278,000, $280,000 account. So overall, looking pretty good. I think this monthly net lick is off, so I think we need to fix the formula. So monthly net lick, we're down a decent amount just because the market's moved down. However, I don't really care about the net lick as much because I'm here generating cash flow. This net lick means nothing until you start closing losses, and we continue to close winners on the day. And if this market does start to curl up, or as time passes and our theta starts to pay off, we're in good shape. So let's take a look at what we did on Friday. So there was a pretty active day here on Friday. I'll highlight in blue here. The first thing we did during the day was we did have to close a bear trap trade that we had on. It took us 10 days in this trade. It was a great looking trade for quite a while. And then, just a gap down on Friday. I closed it because the mechanical thing to do was to close it right where you should. It was a $600 loser, which was the 1x max profit in the trap on this bear trap trade that we put on. This is a trade we used to do, 2-3 years ago in the Income Navigator portfolio. Some users wanted to see it, so I put it back on. Market did not go our way. Had we not sold it in the morning and held on to it in the afternoon, we would not have been forced to close. But I stick to my mechanics in my trade. So looking back, it doesn't do anybody any good. So I took the loss and I moved on. Don't really care. We did have a put fly on NVDA. Again, I was expecting NVIDIA to drop more. It did not. So that one was also a loser. We let that go. We had a long-term 112, the put debit spread expire on that. Yesterday, there's no buying power, no nothing on that. I don't count that as a win or loss since I already counted the naked puts as a win on that particular trade already. So not going to double count. And then we had our 4 short-term trades here. So in this account, obviously, because of our buying power and what we have invested, we don't put on much size on 0 DTE. I do it on other accounts that have larger size, but it's the Income Navigator account, and it's not here to do a ton of 0 DTE, but playing around a bit yesterday. So we did put on an iron fly at the open, opened it up for 24.75, closed it for 22.80. That was an 8% winner on that trade. 5.7% return on capital, took in $390, only did 2 contracts in this account. Then we also put on a call spread, as I mentioned, early in the day because I felt that the overall direction was lower. And even if we got a bounce, which it looked like we were going to get, I didn't think it was going to get up to that 4,400 level. So this was like a 3 or a 5 delta short, 10 wide. We took in 40 cents and we closed that thing for 10 cents. So we had a 75% winner on that. I only did 7 contracts in this account, but took in an extra 210 on that one. All right. So we also had a put butterfly that we had put on as a 1 DTE trade. We put that on Thursday, pegging at 43.50 level, which is where we ended up, hovering around for that first hour and a half on the day. So, I think Gabe in our Discord called this one out, joined him on this particular trade, was a prescient center strike there, and we hung around there for quite a while before starting to move off of that. Once we started to move out of that range, I just closed it and took the win. 122% winner on that. Only did 1 contract, $165 in this account. And then we also did a call butterfly. As soon as we started to see that MACD and TTM squeeze reversing, RSI coming from oversold in the morning, I put this out of the money call butterfly on, centered at 43.80, and held on to this, a good chunk of the day. We spent $2.20 to buy this. I only did 1 contract in this account. We ended up selling it for $370. At one point, it was over $420 or so and change. But as the market started to move higher, I decided it was time to get out of this trade. So we took a $150 winner and went home. I did do larger size in other trading accounts that I have. But again, the purpose of the Income Navigator account is to really focus on premium selling, theta trading, focusing on the strangle, the long-term 112 trades, as well as some other 112s. However, we do a little dabbling on the 0 DTE, and it was a nice day to do that. It paid for the bear trap loss, and it paid for the put fly loss on NVDA. So it paid for those two trades to be on, and kept us interested and engaged in the market during the day while everything else worked. So we had a great up day in the trade, or in the account for the day. All right, so nice bounce on the day, almost a $5,000 bounce in the account, up 5,327 for the month so far through the 18th. We'll keep it rolling. Goal is to hit around $8,000 in realized on this size account here. And I think overall for the week, it really doesn't do any good for me to really go through any of my other accounts, because I don't really share those here. And talking about results in accounts that I don't share live doesn't really do anybody any good. I try to give you live trades in a live account so that you can follow along what I'm doing and see where we are. However, I think on the overall day, it was a fantastic day. We did close a bunch of trades in the small account, or in the IRA as well. So we had some strangles come off, which were perfect. I think yesterday, the total P&L on the day, somewhere around 12, 13, 15,000 on the day. So a good day overall. We're up well over 150, 200,000, I think, for the year overall on the accounts. So doing fantastic. Excited to see where we go in the second half of the year. I do think the direction will be down at some point substantially, maybe September, maybe October, November. Don't know. I'm not predicting a epic crash. All these credit crisis people, I don't know. Maybe that happens. Maybe it doesn't. All I know is I'm just going to trade my plan, and we're going to try to keep our Greeks where we need to be. All right, guys, have a fantastic weekend. If you like this video, please click that like button. Help me out. Go ahead and subscribe if you haven't. I've got some new stuff coming out for you. I hope you like this, and have a great weekend. Take care, everybody. Bye-bye.